In this video, we are going to talk about stocks from Germany. So before starting this video, please like this video and subscribe to our channel for the future updates. Germany's economy is the largest in Europe and one of the largest in the world. It is a highly developed and technologically advanced country that is home to some of the world's most well-known engineering and technology firms. The nation is also known for its numerous World Heritage sites, rich cultural history, and numerous magnificent monuments. As a result, Germany is one of the world's most popular tourist destinations. You may be aware of this, but are you aware of the stocks of top German companies operating in a wide range of industries? These include automobiles, machinery, software, finance, and telecommunications. Here's a list of the stocks from Germany. Let's start. Number 5. Volkswagen. Volkswagen AG, also known as the Volkswagen Group, is a multinational automobile manufacturing company based in Germany. The business is headquartered in Wolfsburg, Germany, and is one of the world's leading car and commercial vehicle manufacturers. Passenger cars, commercial vehicles, power engineering, and financial services are the company's four divisions. Volkswagen, the world's biggest automaker by revenue, owns brands such as Audi, Lamborghini, Porsche, Skoda, Bentley, Bugatti, and Scania. Investors aren't really flocking to the car industry right now, and Volkswagen AG, ETRVOW3, is no exception. During the late 2018 market sell-off, most auto stocks took a beating, and a few have yet to completely recover. As a result, many companies' stocks continue to trade at unusually low prices. Volkswagen AG was harmed even more by its unintentional participation in a major diesel emissions cheating scandal in 2015. The automaker is still dealing with the fallout from that incident, having to pay fines, recall cars, and fight legal battles. It has cost the organization billions of dollars and has had a major impact on the bottom line. The good news is that the German automaker has now seen the light at the end of a long tunnel, and both the company and its investors can now look forward with hope. The company is working hard to improve its battery electric vehicle manufacturing capabilities. The VW ID.3, the company's first mass-market long-range BEV, is about to go into production, with many more planned to follow in the coming years. By 2025, the automaker plans to sell about 3 million electric vehicles per year. In addition, the company's SUV and luxury car sales are increasing. It owns brands like Audi, Porsche, and Bugatti. With the diesel crisis largely behind them, Volkswagen's profit margins and operating cash flows are improving. Operating income excluding one-time items increased by 12.8% to €19.3 billion, $21.19 billion, in 2019, compared to the previous year. Revenue increased by 7.1%. Owing to the spread of the novel coronavirus, the company recently revealed that it was planning to shut down all of its European factories. The pandemic's long-term implications are difficult to foresee at this stage, yet VW's forecasts for bottom-line growth over the next 5 to 7 years seem reasonable. Number 4. Siemens. Siemens AG is a multinational conglomerate headquartered in Germany that specializes in electrification, automation, electricity, transportation, transmission, and digitalization. Siemens is one of the world's leading manufacturers of energy-efficient, resource-saving technologies. It is Europe's largest industrial manufacturing business with a global presence. The Munich-based company is also a well-known name in the medical diagnostics equipment industry. In addition, it is a leader in infrastructure and business solutions. The Siemens AG results were unfavorable. Orders fell 2% from the previous year's high level of €24.8 billion. The company's net profits fell 3% to €1.1 billion, and adjusted EBITDA from its manufacturing sector fell to €1.43 billion. Revenues decreased by 1% to €20.32 billion. The German conglomerate warned of a stuttering global economy in 2020, as well as a downturn in its short-cycle automotive and machinery goods. Despite the near-term headwinds, however, the stock of one of the world's largest engineering companies has strong long-term value. The business has a strong balance sheet, plenty of cash, and the capacity to fulfill its financial obligations. Siemens is also committed to renewable energy investment, which bodes well for the group. It recently announced that it would pay €1.1 billion, $1.2 billion, for Iberdrola S.A.'s 8% stake. Iberdrola is a global Spanish electric utility that specializes in renewable energy and is the world's leading wind power manufacturer. The bond market is purchasing Siemens corporate bonds for 2 to 5 years at a marginally negative yield, meaning that now is the time for equity investors to jump in and purchase the stocks solely for its yield. Overall, Siemens appears to be a decent value for income seekers if you are willing to swallow any bad news that looms on the horizon along with low earnings expectations. Number 3. Allianz. Allianz SE is a global financial services firm based in Europe. Over 100 million customers in over 70 countries use the Munich, Germany-based company's property casualty insurance, life, health insurance, and wealth management products and services. For obvious reasons, Allianz SE is regarded as a dividend rockstar. Over the last 10 years, the insurer has increased its dividend payouts from €3.50 to €9. It has a 4.5% dividend yield, which is exceptionally high for insurance stocks and places it in the top 25% of dividend payers. It has a proven track record of consistently rising dividend payouts over the years. The best part is that, with a trailing 12-month payout ratio of 52%, it has the potential to pay the current rate of dividends from its earnings, implying that it can continue to pay dividends without interruption in the years ahead. However, Allianz, ALVG, D-S price has recently soared, which has had a negative impact on the dividend yield. The corona pandemic has had a calming impact on the stock's price, opening up a new window of opportunity for more purchases. With a market capitalization of €84 billion and strong operating results, the group has the financial resources to withstand the corona shock to a greater extent. In 2019, the insurance behemoth posted a €11.9 billion operating profit and €142.4 billion in overall revenues. It has recently announced a €1.5 billion share repurchase program. Analysts predict that Allianz's stock price would rise to €234.79 in the next year, marking a 52% increase from its current level. Number 2. Linde. Linde plc is a world-leading supplier of industrial, process, and specialty gases, founded by the merger of Linde AG of Germany and Praxair of the United States. It is the world's largest industrial gas firm in terms of sales and market share. Linde is divided into 2 divisions: gas and engineering and materials handling. The company manufactures a variety of industrial and medical gases, including oxygen, nitrogen, argon, rare gases, carbon monoxide, and carbon dioxide. It also designs and builds turnkey gas manufacturing plants and is one of the world's largest producers of industrial vehicles. Linde has a market value of $80.98 billion. Linde plc produced good operating cash flow of $6.12 billion in 2019, which included more than $800 million in merger-related cash outflows. The corporation spent $3.7 billion on capital spending and paid $1.9 billion in dividends. Linde has announced a $2.6 billion stock repurchase program, as well as a $507 million gain from ongoing operations and 94 cents adjusted earnings per share for the fourth quarter. The company's fourth quarter operating cash flow of $2.17 billion was up $302 million from the third quarter, owing to better working capital. Apart from its strong results, Linde is worth your attention due to its long dividend history and high yield. The firm has a 5-year dividend history that has seen steady dividend raises. It has never skipped a dividend payment or reduced it, and its latest annualized dividend is $3.852 per share, paid in quarterly installments, with the most recent dividend ex-date on March 5, 2020. Linde's stock has a 1-year target price range of €142 to €235, according to analysts. They expect Linde's stock price to rise by 33% to €200.65 in the next 12 months, from its current level. Number 1. SAP. SAP SE, short for Systems, Applications, and Products in Data Processing, is a multinational software company headquartered in Germany that develops enterprise application software and offers software-related services to manage business processes and customer relationships. SAP SE is not only Germany's most valuable technology venture, but also Europe's. For the fourth quarter ended December 31, 2019, the ERP leader announced a strong collection of results. Cloud revenue increased by 39% to €6,934 million, while overall revenue increased by 12% to €27,553 million. Total sales, including cloud and apps, increased by 12% to €23,014 million. The business lifted its sales and profit outlook under new co-CEOs Jennifer Morgan and Christian Klein, who took over from longtime CEO Bill McDermott in October, boosted by the strong results. SAP increased its outlook for adjusted operating profit in 2020, expecting it to rise between 8% and 13%, while remaining confident about its target of €35 billion, $38.8 billion, in revenue in 2023. The restructuring and expense of $8 billion incurred as a result of the acquisition of Qualtrics in 2018, which specializes in analyzing consumer sentiment, lowered operating profit by 21%. SAP's activities are now focused on cloud computing, which is a major source of revenue for the company. Investors remain confident that the company's strategic path will begin to pay off in the coming years, and that it will continue to outperform the market with a new long-term plan based on organic growth and productivity gains. Analysts expect SAP SE to trade at about 146.00 in the next 12 months, representing a plus 32.40% increase over its current price. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.